Good afternoon, guys. It's Keith Trades with the Money Printers, and we're going to go over today's June 20th short trade, and we're going to go into a different type of entry that I don't necessarily teach. When you're not too confident, and then when you get the confidence to go in, right, market kind of leaves you behind. Right, so this is a different type of entry. This is an inverse entry without it retesting it. Usually, when you see an inverse entry, right, you'd want to see us. Let's say we have a fair value up here. You'd want to see us displace through it, close above, and then tap back in. This type of entry is just we close above strong, and you just immediately get in and factor it in. Right, same thing on the flip side. So say we have a bearish fair value gap. You would look for what? A close below and a tap back in. This trade that we took short, we just displace through, close below, I immediately get in short. Right? That's the entry I'm talking about. I don't teach it because it's a bit like force. It's a bit forced in a sense. But when you have the confluence and when you're in line with the trend, it's a very confident and quality entry and very little drawdown for today. So without further ado, let's go to a pre-market plan. Right? Again, each plan is going to have a play point. Today was that 1 hour fair value gap. If we respected that we were currently in pre-market, we would run higher. If we just placed through it, I was looking for lower. Right? I took a loss because I tried the longs out off the open, but it was exactly in my plan, and I'm totally not mad at that. So let's get in, right? 2023, 2208, 2172, and 2126, right? I said we either trade higher, then break down, or we should just place through the 1 hour that we're currently in to run lower, all those stacked targets, right? So on the charts, let's see why the shorts came in today. Right, coming in the session, we have a power of 3, right? We see this accumulation from the past 2 days, and we start to upside manipulate these highs, right, into what? All-time high. Right, coming into the session, we see a 1 hour market structure shift, right? Bullish here, inverse, bullish here, inverse. The 1 hour that my play point that I was talking about was this one lower, right? That's what we're currently in pre-market. So I was looking at this, right? We're in here pre-market. If we respect them, we can run higher, right? If we just place through, right, then I want to see lower. Right? That was my plan for the day, right? This was my play point on the 1 hour. Right, let's go into a targets. Right, targets very simple. I talked about the stacked lows, right? Here's the 20, right? Here's 26, right? Here's 23, right? This low here, right? Here's a 208 low, right? I know they're close enough. If one gets hit, they'll both get hit. Right, here's a 92 low for my target. Here's another target low that I hit, and then here is my final target low, and then here is Tuesday's low. That was my final target, right, for the day. Right off the open, very simple. We just ripped 2 targets off the bat, right? Off the open here, opening, we just ripped these targets off, right? And then I saw a buy model come in. We had a 5-minute fair value up. I tried out the longs here and was stopped out immediately. But why am I not upset about that? Let's look at my plan. I likely want to see us travel lower into sell side and then find the buy model reversal. What did we do? Traveled lower to take sell side, inverse this, came back through the 1 hour, and then we see a 5-minute fair value gap that I got long. I got long here, 5-minute as well, and I got stopped out. Small size, totally fine with that. If it's in my plan, I'm not going to be mad. Right, but then let's see why I started to look at the longs. Right, as you can see, my fault, not longs, the shorts. As you can see, we see what? This swing high gets cracked, and then we see buy side sweep, internal sweep here, and then we see this 1 minute fair value gap that I got in long get inversed. And then what do we start to see here? 1 minute fair value gap respected, 1 minute here respected, right? Look at the wicks and look at where we're closing. So what does that tell me now? Okay, we had a buy model, but now we just displaced through it. This 5-minute fair value gap that I was looking at for the longs, right? Wick to wick here, right? What happened there? We end up closing below here, right? So what does that tell me? The buy model that came in, fake out, right? Fake out. Didn't want it. And then now what do we see here? 5-minute candle closure below. So now I can say, okay, sellers are here. Sellers are on longer time frames, right? Like I said, in the 1 hour, we took this buy side. We've been breaking down. We've been trending down ever since, right? So what did that tell me here? Now I want to look at the shorts, right? This is a 2-minute inverse entry, right? You could have got shorts in here, but again, I was still in the longs here. I didn't get stopped out until around here, right? So I was still in the longs looking for the higher prices, and this was my point of entry to get the inverse shorts, right? We had a close below on the 5-minute here, and then the inverse entry came back in. But why did I not take it? Right, I wasn't too confident just yet. Right, we're still in the 1 hour. We could still see, inefficient action find the buying. Once I see us crack this low, and then I immediately just get, oops, my bad. And then I immediately just get short, right? So this is like a very weak close for me, right? I don't like it. When you see a slide through, clearly disrespect, right? Then I was totally fine. Right when we closed, I got in short here with a 215 entry short, right? So yes, we did have an inverse, but again, right, wasn't too confident just yet. Once we broke this swing low and had a strong close, then I immediately got short here, candle closure below, right? If you waited for the 1 minute fair value gap, wait for the 1 minute fair value gap or an inverse entry, you never get it, right? We get my short here, a little bit of drawdown, and we rip through, right? My short here, my stop was at this wick high or this wick high. I was watching it here. For first price target, right? 21.92, right? Didn't have that target in the callouts, which is kind of an issue. But then, right, 21.72, which is this one here, and then a 21.60, that low, and then obviously 21.26 was previous day's low, right? I didn't end up holding this target. I was totally fine getting a short here, right? Getting a 25-point play, 40 points, and then 56 points, right? All out there, totally fine with that, right? We were displacing, cracking. Once I saw this candle come in like this, I just got out, took full profits, totally fine with that. We ended up running lower to that target, and then market came back higher, and then absolutely ripped lower. Right, I took some short scalps here, right? I took a short scalp like here and then here. Not going to go over those, but the fills are at Keep Trades IG, right? But that's the trade model, right? Not too confident just yet, and once we close below aggressive, I just immediately get short. Instead of waiting for us to inverse, I just right on candle closure, I get short, right? That's the thing I want to teach today, right? I do that a lot. I don't teach it because I think it's a bit forcing, but when you see the model come in and when you truly see this placement come in, totally fine to take it. Just put your stop above the wick high, and then you could factor it if it comes back into it or add to your position if so, right? But that's June 20th short trade, and talking about this inverse entry, a bit different than a normal. And thank you guys for watching. Be sure to like, subscribe, all that good stuff. And if you have any comments or questions, I'll be sure to answer them fast.